The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com, that's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon, everybody. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein, and you know where to reach me, 631-647-4694. We talk about our code, which is choice, organization, and direction in education. And we work with hundreds of advisors across the United States, both insurance professionals, CPAs, attorneys, other professionals that reach out to us. And we help quarterback your plan, and particularly in the areas of insurance where my expertise is. And we're like a insurance broker's broker. They come to us to review their plans, and we can help you with yours as well. You know, today I know we're preparing for a big storm here on Long Island, and I hope everybody is prepared. But financially, we are also at a storm crisis, and I hope that you realize it. The market, we're in for a very bumpy ride. And why is that so? One of the big factors that we thought was going to occur earlier in October, I started talking about September, October, November, December. I keep talking about it. But now's the time that you really have to think about interest rates are moving up. What has happened in the last 4 years when the market has been going crazy, and we know there's COVID and everything else, but one of the net effects is the market has had tremendous success. And as you can see in the last 3 or 4 weeks, we've had some major flip-flopping and going up and going down, and that's going to continue because the Fed rates are coming up. So one of the things I advocate is to take some of the money off the table. If you're in retirement, you're about ready to retire, you need to have a strategy and take some of your winnings off the table. And now is the time. So, and if you're not involved in the market, now there's a lot of noise about the market, but if you've never entered the market, or you're not in the stock market and your money's sitting in savings accounts, I want to talk about that today. Because where is your safe money? Where is your rainy day money? Well, I really want to focus in on annuities today and really discuss why even a fixed annuity with a fixed interest rate can be to your benefit today more than ever. Annuities, so you know, have two qualities to them. One of them is that any money you put in annuity is tax deferred, meaning that all the interest gained every year is not taxed. That's big. And or an annuity like Social Security, like if you win the lottery, will pay you a payment stream, which can guarantee that payment stream for the rest of your life or a certain amount of time. So there's two qualities to annuities have. One is tax deferral, and two is a guaranteed income stream. So both of these qualities make annuities a unique product in the marketplace. But today we're talking about your safe money, your rainy day money, your 6-month to 12-month savings. Where is that money? If it's sitting in a bank, you are losing money. Now, how do I say that? Why? If it's sitting in a savings account and you're making less than 1%, or you're making 1%, You're being taxed on anything you make sitting in that bank, and inflation's at 5 to 7% right now. So you're losing money. You're losing buying power by having it sitting in a bank. It's not keeping up with inflation and taxes. There's two things that hit your money: inflation and taxes. So not only is it the interest rate not keeping up with inflation, but you're paying taxes on that money all along, so that money cannot grow. It's only going to get spent down if you're using your money. It's only going to depreciate in value as time goes on. Same holds true for a certificate of deposit, or a CD. I hate to say it, I call them certificates of depreciation. And I know all the bankers are going to be mad at me, but that's what they are. If you're buying CDs, and people buy CDs as their home safe thing, and they're getting 1% and 2%, A, it's not keeping up with inflation, and B, you're paying taxes on that every single year. Now, let's look at an annuity. Let's look at what I call a fixed annuity with a fixed interest rate. Because the treasuries are coming up, and because everything, we are now entering the zone where you could maybe get 3% guaranteed as opposed to 1%. So that's already a huge savings, and it's not taxed every year. It's deferred. So that money will compound, let's say, at 3% on a fixed rate, or 2.5% to 3% right now on a fixed rate, without it depreciating and that money being taxed. That's your money, so it's not taxed. And that's why I liked fixed annuities a great deal. And now is the time to start reconsidering your whole portfolio and reallocating some of your money into that fixed bucket that you know is going to be there. Better than a bank, better than a CD. An annuity is offered by insurance companies. So you have the full backing and reserves of the insurance company, and the full backing and reserves of the U.S. government, of the state governments rather. So while you may feel safer because it's in a bank, that it's not growing for you in a bank. It's sitting there and depreciating, losing money. Even though that you're a good saver and everything else, it's losing money. So we like to talk about fixed annuities. Now, a fixed annuity is going to pay you a particular interest rate. There's also what they call index annuities now that will track, let's say, the S&P 500, but will have a floor of maybe 0 or 1%, so you can never lose money. But at the 1% rate you're making at the bank, to have an index with a 1% floor, that I know the worst is going to be is 1%, but I have the potential of growth of the market, is a far better feel than sitting it in a CD or bank account growing hair. So today, the word is, now is the time to reallocate. It's the time to take some of your winnings off the table. Now is a perfect time to do that, because you are going to hit turbulence. If you leave all your money on the table, you may go broke, and it's very hard to come back from a big loss. It's one thing to preserve your winnings. Any gambler will tell you, and they're at the casino, you take some back and you put it in your pocket so you don't walk away with nothing. So now is the time to do that. Fixed annuities are a great option for doing that. I think it's very important that you look at that and you reach out to us and talk about not just your investment assets, talk about your rainy day assets. Another thing you can do is secure those assets with a life insurance policy. If you're not having any use for that money immediate that you need for your income, and some of that rainy day money that you want to leave behind, rather than leaving, let's say, your life savings behind that's not growing, you could leverage that money by buying an insurance policy that will have some growth in it. The growth would all be tax deferred, no tax, and the death benefit would be tax free. So today, the word is, annuities are big, life insurance is big, and they all should be part of your portfolio of investments. And talking about your safe money, your rainy day money, reallocate, take advantage of the rising interest rates that we're now going to be seeing because of the inflation and because of the rising and because of the market turbulence. And there's going to be more market turbulence. The Fed has created, they said they're going to raise rates 4 times this year. We may be entering some sort of war. All these things play on your money, not just what's going on in politics or anything else, but you want to take care of your money, and that's what we want to help you do. So you're listening to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. We're going to be back after a few minutes. By the way, if you would like to reach me, 631-647-4694 or my website, mainstreetplanninggroup.com. We'll be right back. Welcome back to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. Once again, prior to the break, we were talking about fixed annuities and reallocating some of your assets into some safe assets. And we compared them to some of the known assets in a bank, such as savings accounts or CDs. The annuity is actually safer because it protects your money, as opposed to a CD, which you have to pay tax on every year and is not keeping up with inflation, or a bank account with stale money. So we're looking at reallocating, and we're talking about taking some of the money off the table that you have in the market, because the market's in for a bumpy ride. And you've seen it the last month. We knew it was coming. It was a matter of when, because there are many factors going on right now. The government is broke, A. B, inflation is rising very quickly, as you may hear in the news. And with all these expenditures and all this money and all this inflation, it drives up interest rates. Now, what also happens is, from a global scale, the market is overheated because there was no fixed growth. So for the fixed growth, the big investors were putting all their money into the market. And the smart investors are taking a piece of that off and putting it into fixed investments. And as the interest rates rise, you're going to see that. But all that demand for interest rate has been driven to the market. Now the pendulum's going to swing a little bit, and as the year progresses, you'll see that pendulum swing more. But if you're near retirement or at retirement and you're all invested and you're all in the market, please listen to me. Take some of that off the table. Take some of your winnings off the table and secure them in safe things so that you have your money for the rest of your life. An annuity can give you a guaranteed income for the rest of your life with some of your assets, or we can defer those gains and continue those gains on a safe, conservative bet, better than the interest rates you're getting in the bank. That's my message for the day, to talk about annuities, because I think it's very important. It's a very misunderstood product. It's not that complicated, but people try and make it like it's, is this bad? No, it's a great, great product. It's a great thing that could help many, many people. Now, onward to another topic. One of the things we talked about last week at length, and we talk about, is ethics and working with people that you trust. It is so important. I belong to this association, the National Association of Insurance and Financial Advisors, and I'm deeply involved in the state and on the federal level, helping consumers and helping the private public sector with protection products. It's so important that you have somebody who cares about their industry and cares about you that can help you. So with that, there's been some changes just this week in the state of New York. We have another carrier, a long-term care carrier, that has an asset-based plan. I'll describe what that is. That's pulling out of New York. The product is very limited in the state of New York on what your options are if you're trying to protect yourself with long-term care. The particular product I'm talking about had a very unique quality. And what it would do is it would take a lump sum of money and you would buy this product and you'd never have to pay for long-term care again. And it would have this long-term care element. So maybe if you put down $100,000, you would get $300,000 of long-term care. You could set it and forget it, and there's no more premiums or anything else. And that money is still accessible to you later on, but it's there for your long-term. It's there for that rainy day fund, so you don't have to think about it anymore. It's a great concept, great product. It's leaving New York. You need to know that. The market is changing tremendously. I'm working with the state and the feds to come up with solutions because the federal government and the state government have a big problem, as well as you do. Long-term care costs, if you need help in your home, you need help in a nursing home, you need an assisted living, if you need help in one of these areas, you need solutions. You need to have a plan because it will cost a lot of money. And the game plan is if you go broke, there's something called Medicaid, which is welfare for the elderly. And that is the number one provider of long-term care today. So why the insurance is to prevent you from needing to go on the government payroll. That's the key. If you want to go on the government payroll and let them do what they want, I mean, that's fine. That is a choice. But it wouldn't be my choice. I want my choice to live in my home the way I would like to live. Even if I can't walk or do things for myself, I would want to be comfortable and live the way I want to live. And that's why long-term care is so important. So it's so important that we have products and things to help along the way, not just the government, that we need the private sector with insurance companies to aid in this manner. So with products leaving and limited products, you really need to plan. Now, I had an advisor that reached out to me last night who had a client who had a whole life policy that they've been putting money into for a lot of years. They have a lot of wealth. They also have long-term care policies. They're paying $7,000 a year for their long-term care insurance. And they have this life insurance policy they've been paying whatever to. They've accumulated $200,000 in this life insurance policy. You say, you know what? We're very wealthy and we're set, and we really don't need this life insurance policy. And you know what? We really don't want to spend any more money feeding something, and we don't want to spend any more money with the long-term care policy. So our advice was really to take that money, and we're able to get them $1 million of long-term care coverage and never have to pay another dollar just from reallocating that life insurance policy they had into this asset-type product. But it's going away. And I hate fire sales and this and that, but the one main product is going away, and it leaves New Yorkers with very few options. But so you need some creativity on the right thing. If you haven't done planning, you always need to go over all your options. This is why we have advisors reach out to Main Street Planning Group and my firm to give them solutions. And there's no one solution for everybody. So I hate cookie cutter stuff. You know, you keep hearing, oh, buy this, buy that. No, there's no one solution. There's no one product. There's no one for anybody. Everything is customized to your needs. You know, what are your needs? What are your limitations? How best to take care of you and insure you and protect you from taxation and running out of money. That's what we do. We protect you from taxation and running out of money, and we make sure that your legacy is protected and that you have something in your name to say, hey, I took care of my kids, my grandkids, and every other thing. So that's what we do 24/7. That's what we're asked to do. There's a lot of complicated things, and we need to review your fixed asset of your portfolio, your insurance portfolio. Now, the biggest thing I tell you every week, I try and tell you every week, is if you are successful or starting out wherever you are in life, You need to put a plan together, and you need to have those plans reviewed by professionals, whether it's your accounting, your insurance, or your legal needs. It's all important that they're reviewed on an annual basis at the minimum, and that they all integrate. I can speak from the insurance world and tell you that policies have changed dramatically over the last 5 years, last 10 years, last 20 years, and that anything that you have bought in the past and put in your drawer, you better have it reviewed. Anyhow, this is the Main Street Code for financial success. We're heading out our half hour here. Be prepared for the snowstorm. I hope everybody's safe, but also protect your finances for the storm that's coming. Thanks again. Look forward to having you. Stay warm, everybody. Stay off the roads. Thanks again.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.